Good morning, traders. It is Wednesday, June the 11th. Going to cover the markets quickly here and kind of recap on a market spike, kind of foreshadowing that the market does sometimes. Let's just start off with the S&P 500 futures. This morning we're seeing the equities market trade down about 0.5%. We're starting to see the market lose its upward momentum, which is what we started to expect once we saw this pop here and everybody piling in. We started to expect a little bit of a weakness. Wouldn't be surprised if it comes all the way down to potential 1920 area. This is the next high volume support zone. We had a consolidation through here, so lots of shares traded as seen with the volume at price indicator. We've got now high volume resistance up here around the 1948. So wouldn't be surprised if we see it start to pull back. Overall, the market is still in a strong uptrend. Pullbacks are healthy. We need them to happen, and if it does dip down into the 1920 area, 1924 area, could be an opportunity to get back in, low risk opportunity for a continued bounce and for it to continue to trend higher. Now the market could easily continue to trend higher or at least sideways for several more weeks. As pointed out yesterday, we're starting to see the market top out. We could easily see this come down and could have a sharp correction, could easily bounce back up and become very choppy over the next couple of weeks, as I think we put in an intermediate top, and then we see a multi-week correction, and we could even see a test of the 1900 level again. Taking a quick look at another index, which is the opposite is the S&P 500, is the Russell 2000. This is the small cap, the speculative plays, and more or less you can see we've had high volume consolidation down here. We had a nice impulse measured move to the upside. Again, simple measured move. We took from the low to the high to this low and dragged it over. We had a forecast of 1752 area. We also drew another one here from this low to this high, back to this low, extending it. This was our range here that if the market could get up to this level, it'll likely find resistance. Now it came up to that level, tagged it, and we are seeing some selling in the market today. This is high volume, the next little cluster high, so we're right into this high volume. It came up, pulled back a bit, and today we're seeing the market reverse down. So we could easily see this start to come back down. So this is a high volume resistance zone. It's a measured move on two different levels, and probably going to see the market stall out here for a day or two, and or possibly even a week, and then we could see it even push to new highs. But overall, it has hit its short-term target, and it needs a little consolidation here. Taking a look at precious metals, we are seeing money move into precious metals and safe havens this morning. Probably going to see utilities sector gap down, and then we'll probably see money move into it today. So we're seeing money move into precious metals, bonds, and utilities. Utilities are holding up while the rest of the market is down, so it goes to show that money is actually rotating slowly into utilities and pre-market trading. Looking at the silver chart, let me just go to the daily. We'll keep it simple. Here's the daily chart of silver, and we're just seeing it trade up a little bit more. You can see we've got consolidation here, so it is working its way up into high volume resistance. And yesterday we saw actually the gold miners have a huge move, the juniors especially. So the GDXJ. Let me just go to the daily chart. Daily chart, we had a nice pop, almost 5% in the gold miners. Now you got to be cautious. This was a bearish pattern more or less starting to form up here, and then boom, we had a big pop yesterday as it broke this previous high, and then it broke this other previous high, which triggers short covering, and you get this kind of explosive pop. This is kind of a pretty popular move in precious metals when it comes to gold and gold miners. You get this type of pattern all the time. You see it start to break these levels, these previous highs, and then you'll see it pop, and then you'll see it reverse, and it can go the opposite direction. All it is running the shorts out of the market, and as the shorts have to cover, it creates a huge rally. Of course, a lot of people watching gold pile in, thinking this is something big, and just like what you see over here, it runs all these little previous pivot lows, and then you see a big reversal, and price sells off. So while we saw some good strength yesterday, we need to see some follow through. We need to see some bullish price action consolidation, not a reversal to the downside. That will be bearish, and we could easily see much lower prices, and for the GDXJ to come down to this 30 area. Looking at the gold chart futures, just flip to the daily really quick here. Here's the daily chart. Gold's up slightly this morning. They're both up about 1/3%, gold and silver, nothing significant, but they are holding up while the rest of the market is moving lower. Taking a quick look at natural gas. Here is the natural gas chart. We've started to see some, we saw some follow through selling yesterday. We had a first move down, little consolidation, second half of that move down. It's consolidating again. It could potentially go all the way down to the 445. Simply, it's had this leg to the downside, mini bear flag, measure that move down. It's around the 445 overall. We really want to see a strong spike, which we could easily still see another surge higher in natural gas here, depending how you want to draw the trend line. Price comes down, could eventually see it pop up, and then we get a big reversal candle in the next few sessions going forward. Taking a look at the crude oil chart. Here is the crude oil chart. It's had a nice rally there the past couple sessions. And this is, let me just go to the daily chart just to again keep them all in the same time frame. You see we're consolidating here over the last couple of days right up at resistance. And it looks as though it's trying to break out to the upside. We're starting to get some high volume, so it's eating through that resistance. It's holding up. It's got some strength. Question is, can it hold up and break through that? If it does pop and break those highs and we get a reversal candle the very next day, we'll be looking to take a short play because we could easily see something like this happen where you get a big pop, all the shorts cover, and then boom, you get a you get a reversal candle more or less, and price sells right off. Taking a look at the chart of bonds here this morning, we can see bonds are trading slightly higher. They've had a strong correction, very similar to what we saw back here. Get a strong move up, get some chop, you get a correction to shake the market out, and then you see it take off in its trend. So we've had a nice strong pullback. We are down to a support zone right across all these pivot highs, here, here, and across here. Of course, we had a breakout, so now it's coming down, settling into there, trying to find support. Zooming into the chart, see we have a little pop this morning as equities sell off, money's rotating into bonds. Now, if we take a look at the a little kind of trick I just want to show you, when you're looking at ETFs, a lot of times you can get a little bit of foreshadowing in the market with price spikes. So you can see here on this candle here, we had a intraday spike in price. Now, usually it doesn't even have the price doesn't have to actually really run up to there. It just has to have a big order go through, and you get this random rogue trade that goes off, one trade way up there, and it creates this spike. When something does that, you've got to start to wonder. The market makers, that's where the market makers more or less have a large position sitting there, and they almost need price to get there for them to clear their position if they're offside. And then the market kind of fades itself up there eventually over time. This happens all the time. You can see it even on an intraday chart. It works well for almost any time frame. When you get a very large price spike, you got to expect there's going to be gravity trying to pull price towards that, wherever that price spike is. And it works even to the downside. For example, if you take a look at the chart of corn, we got long corn a long time ago. We rode it up, and then we had a protective stop in place, and we had this huge price spike to the downside. You can see the price came down, and then it popped right back. Overall, we got stopped out. It was a good profitable trade, though, in the long run, and price has faded down all the way down to where that price spike is, and now it's starting to get volatile. It's having strong waves to the downside, strong pop back up, strong move down. So this is an area, a key area where the market wants to be, and it's hopefully going to find a reversal. Could easily pop back up. I think we're going to see money start to flow back into commodities as this equities market slowly puts in an intermediate top. Money's going to start moving to physical assets. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.